Hi, my economy friends. We're closing out November with another volatile week. But underneath the noise, we're seeing some genuinely meaningful signals from institutional moves to new ETF activities and global adoption trends. Even though price action stayed choppy, the fundamentals remain strong. Let's start with markets. Bitcoin is hovering between the $85,000 to $95,000 range, subject to macro trends that also pushed European stock markets down and Wall Street futures pointed to further losses, while the yen and Japanese government bond yields got a boost from the central bank, suggesting a hike on interest rates. Japan's 10-year government bond yield surged to its highest level since 2008. The move triggered a wave of global de-risking as the yen carry trade unwinds and crypto feels it first. Also last week, the People's Bank of China reaffirmed the country's crypto ban and the promise to increase cracking down on related activity. With all that, Ethereum remained below $3,000 as most altcoins corrected around 10%. Right before this recent whole market correction, XRP had jumped nearly 7%, posting its strongest move in weeks. A big driver was the rollout of new Ripple-linked ETFs, including the latest product from Bitwise Asset Management, which finally went live on the New York Stock Exchange. And speaking of institutional moves, Texas made history last week. The Texas Permanent School Fund, working with VanEck, purchased $5 million worth of Bitcoin ETF shares, becoming the first U.S. state to officially allocate public funds into Bitcoin. This is more than a headline. It shows governments, not just companies or funds, are now beginning to treat BTC as a long-term treasury asset. On the stablecoin front, Tether was back in the spotlight. S&P Global Ratings issued a downgrade on USDT's stability assessment, which made waves early in the week. But interestingly, this didn't slow down adoption. Stablecoins continue to dominate emerging market flows, especially in Latin America, where USDT demand keeps growing. So even with a rating downgrade, which was more about governance than solvency, real-world usage is still rising. And that's something markets tend to care about over the long run. Now, what to watch next week? Bitcoin's support at $85,000. Holding that range could set up a more constructive December. Another point is whether XRP's ETF-driven momentum turns into a broader altcoin rotation. And if more public institutions follow Texas' lead, even small allocations can snowball into a new narrative. And of course, macro signals, interest rate expectations, liquidity returning after Thanksgiving, and the first position flows heading into year-end. Even though November didn't give us the rally many hoped for, the underlying structure keeps improving, and sometimes that matters more than a single month's price chart. That's it for this week's highlights. Tell me in the comments if you think that Bitcoin will recover $100,000 level after the US rate cut. And I will see you next week.